Hello and welcome to ETBFSI.com. My name is Amol Dethe, and we are going to discuss how the BFSI companies are modernizing their value chains. As we understand that the BFSI companies are far more aggressive in digital transformation, specifically in last one and a half years, because of the pandemic, they realize that digital is the only way to achieve and to scale up and to reach to a new level. We are going to discuss what are the challenges basically they face when they adopt value chains, what are the new value chains they are building. And I'm so sure you will find this session really meaningful because I have the best of the speakers going to share their perspective here. And allow me to introduce them to you. So, my first speaker today is Mr. Amit Saxena, the Deputy CTO of State Bank of India. Amit, glad to have you on this show.
Yeah, thank you very much, Amol. Always a pleasure speaking along with you.
Great, thank you, Amit. My next speaker is Elisha Harrington, the Senior Director, Chief Innovation Officer, ServiceNow. Elisha, I'm glad that you are here.
Thank you. Happy to be here.
And my next speaker is Mr. Vaibhav Joshi, the CDO, Equitas Small Finance Bank. Vaibhav, welcome here.
Thank you, Amol. Pleasure to be here.
Great. So to begin with, Elisha, Vaibhav, and Amit, let's discuss and decode how the BFSI company is actually modernizing the value chains. And Amit, I will come to you, and try to understand from you. The basic question is, how should banks or the BFSI companies scale up digitally? I think let's discuss the basics of digital and then we'll go into the different value chains.
Right, and thank you very much, Amol, for your question. And we have been working on digital initiative, not as of pandemic, but we have been working on it for a couple of years since 2016, when we have launched in 2017 a full digital banking platform, what we call as YONO. But at the same time, for a companies or the BFSI segment to scale up to the aspiration of a customer, to how to meet the expectation of a customer, what we have to do a lot of our homework itself. It's not like this that we have become a digital one fine day, right? Because we have got a lot of legacy data which needs a cleansing up. First of all, that's the first step, what you have to do. The second thing is we have to look at how you are going to fetch the data, wherein the question comes in that you should have a enterprise bus service available so that everybody is interacting using that bus to the core banking system. The other thing is the heterogeneous system, how they are going to interact with each other. Because in a banking world, we still have some of the systems which are heterogeneous and which do not talk to each other. So we have to integrate. And this is the basic work which every BFSI company have to do. The newer startups and the young banks, they have already done it. But for a large bank like us, it was an exercise which we have to do. And we have done it not as of yesterday or not due to pandemic, but we have been working on to it for some years itself. And in 2016 itself, we have completed that task, and then we start building a digital platform. When we say digital, our concept of a digital is very clear. When we say digital, it means no human intervention. Nothing like, you cannot stop a journey at a point and say a reference number is generated. No, we are saying if it's a digital journey, you would be end to end it. And apart from it, we are going to give you, there are few of the wonderful journeys which you would be seeing coming on YONO platform. Because we have got a bank day coming up on 1st of July, just wait for some of the marvelous things which we would be offering to our customer. You would be delighted looking at those journeys, and you would say how quickly we have built it, because we have seen that pent-up demand for what we have seen during pandemic. People have got those aspirations which have been left behind. But I believe most of the people have got now used to the pandemic, and they want to still live their life the way they perceive best for them. And that's why you would be seeing some of the journey which would be a delight for a customer on a bank's day when they get rolled out. Thank you very much, Amol.
Okay, I think good opening remarks, Amit, and I will take the same question forward with other speakers as well, starting with Vaibhav. You have some benefits because you started as a digital bank itself. You started late because of the small finance bank came into picture just 4 years back. So you had an advantage of adopting an advanced technologies, right? And everybody has a digital layers in their banks and the finance companies. So my question to you, Vaibhav, is how do you think of scaling up? How do you think of building different channels to what you have already now?
Yes, Amol, we have had those advantages being a small finance bank, and being close to 5 years, when we're completing close to 5 years around September, we have had those advantages as compared to the traditional banks. But at the same time, let's understand that we have been traditionally an NBFC, and then we got the license of a small finance bank. So we have been operating with a very targeted customer base with specific geographies on certain set of products. And when we got the license of a full-fledged small finance bank, we started creating new products. Now, the digital approach that we took was again, very, very product centric. So on the business front, we started with, we bifurcated into customer acquisitions, merchant acquisitions, corporate acquisitions. And we started, moving the digital acquisitions for a customer from a brick and mortar to a digital only platform-led acquisition. So the merchant side, we moved to digital as well as phygital. And there, on the merchant side, we decided to go with a banking plus plus proposition. So there, the idea was that, look, digital may not be just the way ahead, but we may want to do a phygital kind of a product over there. Because what happens is the regulations often do not allow to go for a digital only product when it comes to something like a current account, for example. So there, we decided to go with products that would encompass the entire suite of a merchant, right from digitizing the entire supply chain. Creating a value proposition over there, right from invoicing, ordering, taxation, payments, lending, to linking it to a bank account and settlements and so on. And on the corporate side, we decided to create custom solutions for receivables, payables, payroll, credit, etc., integrating banking within the ERP for real-time payments and an automated recall. Now, Amol, on the technology front, when you talk about scaling up digitally, it is extremely important to understand that, digital scale up can only happen through technology-led innovations. And I'm sure, as we go ahead, Amit as well as Alicia will have a lot to add over there. But what we did start with, as the base for our digital scale up was capacity building, developing robust digital infrastructure, investing in future-ready technologies, moving away from legacy systems to new age systems. And, wherever there were niche areas where we thought, Amol, that, we may not be able to scale up, there we decided to partner with Fintechs for certain niche specific segments. Okay. These were the specific points that we decided to, implement and hence to, move up, scale up digitally.
Okay, valid points, Vaibhav. In fact, I have seen a rally from the banks and the finance company side to partner and collaborate with the fintechs. I think every bank is partnering with at least 8 to 10 fintechs at a time. Elisha, I will bring you here into the picture, and we are discussing about the scaling up and building value chains. But that specific question, I will come to you a little later. But what I learned from Amit and Vaibhav, I will take that question forward with you. You must have seen a lot of BFSI companies transforming, obviously in a digital format and scaling up, far more aggressively. So, how are they actually moving from legacy systems to digital systems, and what are the meaningful ways here that you must have observed?
Absolutely. Look, there's no doubt that obviously cloud is helping with scalability, right? We know that. But what I found really successful with our financial services customers is that they are using, technologies like ServiceNow to help stitch all of their legacy infrastructure. So whilst we've shifted to the cloud, there's still very specialist systems in banking, whether it's the credit engine, credit assessment teams are operating in a multitude of systems all at once. So I am talking about more of the traditional banks. So it's still quite, messy and monolithic out there when it comes to the legacy architecture of any bank. So even in fraud, for example, it's not just one system that's helping to tackle fraud from a suspicious transactions perspective, et cetera. So what I'm seeing is getting a single architecture going and having the glue that stitches all the systems together for a particular agent or specialist or banker is really helpful, because they're able to pull in the standard operating procedures, the policies, the risk and controls and compliance all in one area. It helps them so they don't have to sort of swivel chair, and they can focus on the customer a little bit easier. So that's where I'm seeing most of the digital transformation is a bit of consolidation, but stitching and diving a bit deeper into what we're calling, contextual information. Like, for example, looking at information in like a case, for example, or looking at market information, external data that the banks wouldn't usually, bring into their overall analytics strategy, but looking at, say, external data points with, say, case data to say, for example, we know that the interest rate is dropping and we know that customers are looking to refinance their loan. How can the agents within the bank be proactive and start to reach out to their customer base and, not be so reactive around certain elements? So, there's a lot to talk about, obviously, on this call. I would just add one more use case to the mix. We're seeing, even as emerging technologies like, DLT, distributed ledger technology, and smart contracts. I mean, whilst it, blockchain is still something people are trying to understand and see the use case, obviously, for a bank, the biggest use case I've probably seen has been around trade processing, where the banks are still monitoring, the physical commodity or shipment of grain. So you've got the traders on the trading desk with a bank, and they are they have their trade processing procedures, and the bank has to meet certain risk and due diligence obligations. So what if we could satisfy, between two banks dealing with each other, we could satisfy a level of requirements, trigger off a smart contract? It would just help lean up the processes and help speed up the processes. So that's just a couple of use cases I've seen across the globe at the moment. I'll pause there.
And
Back to you.
Amol, just to add what Alicia is saying.
Sure.
And we tried it. So we form a bank chain, and we tried doing a LC kind of a transaction through a blockchain itself, so that everybody would have a clear view. And we tried it from Philippines itself, right? So SBI have done that along with some of the other leading banks itself. But what we have seen, there's a let me put it this way, there's a bit of a stagnation into the ecosystem as of now, and wherein we have been trying to change it so that to take a lead and make it happen. And but I believe there's some more discussion needs to be done among us only, we the banks itself, right? Then only, and we were very gung-ho about this, that if this transaction we are able to put it onto a blockchain and all the lasers are available, then it would be the great achievement what can be done. But there's certain interest which needs to be, I believe, settled down first, then only it would move forward.
Absolutely. Agreed.
Thanks, Amit, for adding that. And in fact, I would encourage all of you to share the case studies. That's where people learn a lot. And that's where, in fact, I'm sure the readers and the viewers of ETBFSI will also gain some knowledge here. So, but Amit, my now question to you is, let's move ahead specifically on the modernizing the value chains. And everybody is also trying to encash the value chains as well, which they are building. So what are the top value chains, modern value chains, that maybe at your bank, Amit, you are trying to instill, inbuild, or and more importantly, how difficult it is to modernize, the whole chain?
I would tell you, and it's not a lift and shift for any of those, but what we are working on, the hyperscalers automation itself, wherein we want to have a lot of our application to be cloud ready so that we can have a automation done. And then we should be having some of the hyperscalers done. So on demand kind of compute and storage, which can be provided to the application itself. Easier said than done itself, right? So it needs a lot of things to be put up into place itself. The first step is to whether your application itself is ready about it. So we have done a part of it. We are still working on to other part of it. The other thing what we are, as we have been talking about, is that going forward, we should not be having a portal and an app as two different kind of a thing. It's consuming the bandwidth as well as it's consuming a lot of resources at the bank. So we should have a single platform for building all such things. And once we are able to do it, because currently the demand from the market is to, you give me everything now itself and within no time itself. Right. And that is not only true from the customer side, it's true for from every person who interacts with the bank, whether it's a regulator, or the customer or the stakeholders, right? So all stakeholders, if they want that data, which means that you have to provide that information as quick as possible, and that is going to be happening only when you are having a hyperscaler automation put in place. I have no doubt around it. It's still 2 quarters away when we should be able to achieve it, at least for our digital banking platform, itself. But if you think that we would do it for the whole bank, it's a multi-year kind of a project itself.
True. Noted that. I think the customers are also very demanding and everybody wants quick and seamless solutions. I think gone all those days when customer will go to a bank and banker will say, come tomorrow. The customer will say, okay, I want it now. And then, you should have that solution ready. So,
Right.
Vaibhav, you mentioned about the fintech partnerships and how, the digital has been benefiting you. But moving ahead, if you could tell me your strategy at your bank specifically to modernize the value chains, how do you look at it? What are your learnings there? What are the case studies, if you have any to share? And, what is basically your strategy there?
Amol, I want to first start with saying that, when it comes to modernization, and that is how you started the question, I think digital transformation is the key to modernization. But banks find it difficult to modernize their value chain because banks are traditionally a very compliant, a very compliance-heavy, organization. All the systems that the banks have, they are extremely compliance-heavy, and hence migrating to a more agile technology is often difficult for the banks, and that is the reason banks have to look at hybrid tech models. Okay, and like Amit was saying, starting with part modernization is the way forward that banks have been looking at it, and that's how we have also been, approaching this particular thing. Now, a lot of these activities, which earlier used to be manual, have been automated today across the banks, even at Equitas. So, reconciliation in most of the products, they are system driven. They are not manual intensive activities. There are no more dependencies on banks front end for most non-branch led applications. Everything has moved to API banking or microservices. Microservices, in fact, have been leading the value chain modernization as far as Equitas is concerned. And wherever, coming back to fintechs, wherever we find it difficult to, automate, there we have been relying on fintechs, and not just from a distribution point of view, but also from a technology point of view. So, now some of the key drivers for us, key practices for us have been, more digital, less physical, as we like to call it. We have tried to bring in, bot banking. We have tried to bring in AI, data analytics. We do intend to bring in blockchain, IoT, and ML for very niche specific segments. Microservices, we have created exciting platform for microservices. We have created a very intelligent middleware or a middle layer, and as Amit was earlier mentioning in his first question about the enterprise service bus, we are now talking about moving to a very agile enterprise service bus, because that is actually, Amol, the key to faster digital modernization, because everything goes through an ESB. Lastly, what we have also tried to do is we have tried to keep the intelligence at the application level rather at the back end, because that enables a lot of faster processing. Okay, if you keep the intelligence at the back end, then your systems they become extremely heavy. So we keep it at the intelligence, at the application level. Now, what also happens, Amol, is if you want me to specifically dwell on certain use cases, then we have a very fantastic product that we have created on the digital savings account. It's a complete end-to-end journey which is digital. We incorporated that with the video KYC and we call it as a selfie product. Okay, so customer can just go to our website and he can create a selfie account, do his digital KYC, and the account becomes fully operational on its own. And on that same stack, we launched our first neobank, and it is today the most popular neobank in the country, known as NeoX. Within less than 2 months of acquisition, we have 2 months of starting, we have crossed 200,000 customers onto that. So that's a very good run rate if you ask for a bank of the scale of Equitas. Of course, Amit will have a very different view, because the type of numbers that Amit would be looking at on a would be mind-boggling. Right. But for a bank like Equitas, 200,000 under 60 days complete digital is amazing. And now we are, moving on to digital fixed deposit, digital recurring deposits, a digital only current account with the new regulations coming in. We are moving at use cases around the merchant segment as well, and I'll talk about it as we go in further into the program, into the webinar. I will talk on those as well.
Okay, I think noted points, Vaibhav. I think this selfie kind of thing is really attractive. Considering India is the youngest country, the millennials are huge. In fact, we also, do a lot of stories related to millennials, and in fact, we try to add words like TTYL, FOMO, all those kind of words just to attract, the millennials. So let's hope, in fact, when banks will start something like, along with saving fixed deposit and reckoning, something like TTYL or FOMO kind of accounting, or
and Amol,
yeah.
I would like to add one more point. Some of the drivers for this millennials have been, adapting to the habits that these millennials are used to. And let me give you a good example over here. These millennials, when they spend, for example, a millennial uses the MenuX program to, pay for a pizza that he has ordered for 4 of his friends, and he's making a spend of 1,000-1,500 rupees. And the millennial may get a guilt feeling that, oh, I have spent so much, And while he has the option of splitting that to his spend, the moment the app recognizes that he has made the spend, it gives him a pop-up saying that 10%, 20%, or 30% of that spend he can actually convert into a saving just by doing a right click or a right swipe. Okay, and millennials are used to doing right swipe,
Right.
and he does a right swipe, and 150 rupees of a mutual fund investment or a fixed deposit is that. And this is actually millennials are loving this kind of features in the app.
I think quite interesting. In fact, there is one more, what I can say report which I remember is that millennials are far more aggressive in investing in cryptocurrency as well. In fact, they are the highest in numbers. So I think it's a different world, and I think you guys have to be far more aggressive, to cater in terms of digital innovation. So, Elisha, my question to you is about, building security and something like that. So, could you tell me, since we are going far ahead in modernizing our transformation, digital journeys, and adding different value chains? So, if you could allow me, I have a straightforward question then: how to build a sustainable value chains securely? What are the best practices maybe the banks, the insurance companies, or the whole BFSI ecosystem can follow?
Absolutely. So, I mean, obviously, we're dealing with many different vendors and third parties. Third-party risk management is really important. Vendor risk management is really important. Ensuring that the parties that you're working with, whether it's technology providers and other parties, even fintechs, that they are agreeing to certain contracts in place, SLA agreements, that any conflicts of interest are, looked at as well, because the bank at the end of the day is obviously always going under, risk assessments for their programs and new projects. So whatever you're doing, it's all about being able to do all of that upfront work, but do it in a really rapid way so that that doesn't bog you down and keep you from stalling from the speed of innovation. So I'd say that would be, first and foremost. And then, with digital transformation, there is risk in and of itself. Cybersecurity risk, all of that above. So I think it's about really streamlining those critical business processes and services. A good classic example is that one of the banks in our region is using what we call AI-powered service ops around self-healing and detection of where all of their business applications and critical processes that underpin those services sit. Because, with the Bank of England and other regulation around the world, they're looking at banks, and so would the RBI would be looking at banks to say, well, resilience is key, operational resilience is key, and obviously security is first and foremost that underpins that. So the regulators are looking to the banks to say, well, can you absorb shock and risk? Do you have the tolerances in place? Do you have the thresholds? And what's your, business continuity planning? And what's your resilience around some of these areas? So I just say, as a foundation, that would be where I would start. But I'm sure the people on the call would be able to give some real war stories or, experiences for themselves. Back to you.
Thanks, noted that point, Elisha. Amit, I will come back to you. And obviously, I mean, for every business, if you're adding something, adding any new capacity, the question is, how it is performing, whether it's adding something to your profit or, whether it's actually giving benefits to you is a major question. So when digital is far more progressive and interconnectedness is really high, if you could tell me, how do you actually measure the performance of the technologies or the digital that you adopt?
We have got automated most part of our application performance itself, and wherein we keep an eye on the speed at which the volume is coming and what's the response time of an API itself.
Right.
And we have made it a rule itself that it has to be in milliseconds itself, and that has helped us. And the other thing what we have done, we have used some of the very innovative ways of architecturing our applications, and the way we manage that kind of a load itself. But at the same time, we have been seeing that there's a continuous hike in the number of people who have started using the digital platform. So that is an obvious thing which would keep on happening. And the only thing what we have to do, and because there has been some cases in BFSI, so regulator have become very, very agile with respect to how your applications are working. And which means we have to be on a vigil on a 24/7 basis. So even if there is a spike which is coming in, there's an automated way that it gets as a flash to everybody. Right? So it's not like this, somebody would come and tell, that your application may not be performing well. It would be flashed within seconds to a lot of people itself, inclusive of people who are managing the operations, etc. But it would come to me automatically itself. So I don't need to keep on looking at something. And that way we are managing our application. And we have used some of the best of the breed technologies to manage it. The other thing is that keeping your application up is also have become a very important part of it. Not only the performance part of it. You can't be sure that I do a running in the morning and by afternoon I'm lethargic and I would go to sleep, right? So you have to make your application up all the time itself. That is certainly, there are changes which we have already done to all our applications. And we have put in a new architecturing principle. And we have got a group which reports into me, which is called Enterprise Technology Architecture Group. And we have got pure architects over there. Nobody who is from banking background. The pure architect, the people who would question everything because they have to come back to me and tell me why they took that decision of allowing to that to go into production. And that way we are ensuring that two things we are able to achieve: the scalability as well as the performance of our application.
Okay, noted your point, Amit. I think valuable one. Vaibhav, I have a very interesting question. In fact, it's not even a question, just a thought. That just ripples here and there. Every bank and every BFSI company is constantly adopting technology, and at the same time, most of the digital adoptions are also getting outdated maybe after 1 or 2 years because there is a constant evolution of the technology. So what I'm trying to learn from you, Vaibhav, is how do you actually consistently modernize your technologies, consistently evolve, because what you're using today may be outdated, may become redundant tomorrow or day after tomorrow. So how do you actually keep a tab of it and maybe evolve constantly and continuously so that you can serve your customers in a far more meaningful manner?
See, what happens is, and this is a challenge that not just us, but every bank in the country faces. Because what happens is a banking product, and not wanting to sound like a broken record, but every banking product is operational risk heavy, compliance heavy. Okay, because it has to undergo, it has to regulatorily meet each and every guideline that the regulator has put in, and that is why it becomes challenging for the banks to modernize or change their products on the fly. However, that is why what we have started doing is we have started breaking the products into multiple levels. Okay, and as Amit was mentioning, today banks have started creating the architecture in such an agile manner that the front end or the middleware of any product is extremely nimble footed, and you are able to make innovations or changes over there without affecting the core product which is sitting at the application layer. Now, what happens over there is, and we have also adopted those technologies, where the heavily regulated compliance guidelines have been built on at the application level. However, when we talk about the product, we have adopted mobility as a platform from where we render, very, very use case specific features on that product. And it is easier for us to, innovate at that level. Let me give you an example over there. Okay, let me give you an example. Now, prepaid as a product, there have been a lot of, recently there have been some regulatory changes, and the regulator has relaxed certain norms, allowing, now PPIs to be interoperable, so on and so forth, higher limit enhancements, and so on. Now, prepaid from an application perspective, there will be a platform at the bank level, which will be there. But prepaid from a product perspective, whether the adaptation is for expense management, whether it is for incentive management, whether it is for a fast tag, whether it is for a wallet, whether it is for a partner app, a partner PSP app, where the PPI from the bank is extended in addition to a UPI. So what happens is that rendition, if it is managed through microservices and if it is managed through mobility-driven platform, the changes over there are very, very easily you are able to manage and make the changes. Of course, what Elisha was trying to touch upon earlier from an InfoSec perspective, it is important that information security is given extreme importance when this is being carried out. But again, what we do is we carry out extremely use case specific productization. And when I say use case specific productization, these products are actually launched keeping the last mile consumer use case in perspective. And hence, if any enhancements have to be carried out, those are actually driven by the consumer requests. Those are actually driven by the consumer demand and not just by the regulatory guidelines. The regulatory guidelines, the product enhancements are something that are managed at the back end, but from a consumer feature perspective, that is what we do it on the go in the front end. We also like to Amol, keep our products extremely parameterized. Okay, so when we do that, it's easy to switch on, switch off certain things. Okay, it's easier, and you are able to then build one, use multiples. It is very important to have your products on a build one, use multiple model, because then you are able to really monetize this product. And again, I would like to touch upon the example of payment products, wherein a PPI or a UPI or a BBPS or a AEPS or a Aadhaar Pay, and I can talk about 100 use cases at least for this 5-6 product that I mentioned. Same to go with a liability product, or same to go with a asset product. And I'm not even touching upon the technology, because at the technology, I will have one CBS for liabilities. I will have one CBS for assets. I will have, one core application which I will use for my prepaid. I will have switches across for my multiple products. But then whatever use case driven products that I'm creating, they will lay over here. So that is where I'll keep on making the changes. Then I have the middleware, I have the ESB in between over here, and then I have my platforms over here, which is an extremely efficient way, if you ask me. And the fintechs are also doing the same thing, Amol. So if you look at the Google Pays and the Phone Pays of the world, if you look at the Neos and the Zaggles of the world, if you look at the Zetas of the world, and I'm not talking about platform enhancements or platform creation from a banking perspective, I'm talking about the go-to-market. They control the application, they control the user experience, they control the features that they want to do. And if banks are able to start doing that in a more agile manner, which we have already started at Equitas, the GTM you are able to control, the consumer experience you are able to control, you are able to provide the product that the consumer is demanding without having to make alterations at the back end, which a fintech was able to do yesterday. Today, that is what a bank is also able to do.
Okay, I think a detailed one, Vaibhav, very valuable points I think you shared here. Elisha, considering your global experience, I'm sure you talked to a lot of global banks as well. And hence we are discussing here, the modernizing the value chains, rebuilding new systems. What are the key points or major highlights that you would like to share, which global banks follow, and maybe other BFSI companies can maybe, take a learnings out of it? So straightforward question to you is, what is that the global banks are doing or global BFSI companies are doing to modernize their value chains? What are 3-4 things that they are keeping in mind without forgetting that I have to get this done, to modernize my systems.
Yeah, absolutely. It's no better way than to speak through use cases and examples. It just brings it to life a lot easier. I know KYC was mentioned earlier by Vaibhav, and it's almost like we're seeing again enhanced due diligence processes. Due diligence processes are extremely important to the bank. But say if it's a commercial or business customer or institutional customer to the bank, those processes are really rigorous and they're really manual. So automating a lot of those is almost best practice. It's what all the banks are doing. They are starting to automate their big value chains and even consider KYCs as a value chain sort of itself, because the bank needs to be focused on being more than just their credit facility and looking at their key lending or credit card propositions. It's actually, they're also validating identity. So they're also an identity management, company in a way. They are beginning to be more like tech companies. They are offering more when it comes to validation. And then even with, say, the likes of open banking, for example, more data is being given and available to the banks to do more with. So really, I would say each of these areas in itself are needing to be digitized and taken, re-engineered, and sort of where the processes are, need to be process steps taken out. That's also okay. We can't just have banks doing what they've done for the last sort of 10 years. And I'm talking from a value chain end-to-end, say, lending process, time to pre-approval or time to full approval has to be reduced across the board. So obviously it depends what bank I'm talking to, but I've seen various timeframes. So it's all about reducing the number of steps. Maybe it's not reducing headcount, but it's giving productivity back to the agents so that they can do higher value activities and become more strategists within their selected area. Or maybe you can utilize the workforce and become more skilled in other areas like analytics and data science. But it's about freeing those people's time up, because in banking, middle and back office processing is just huge. It's 80% on average of what the bank does. So I'm seeing a huge automation activity, digital transformation of the middle and back office processing. So areas I've mentioned, but credit assessment teams, people that spend hours doing credit modeling and assessment decision making, having auto decisions, systems, being able to, through algorithms and using really intelligent technology, we can make auto decisions, and we can use data a lot better than having a credit assessment team do really manual activities like ingesting, evidence documents or collateral documents or, payslip verification. We can use things like optical character recognition, OCR, and different technologies to go and process some of the documents. So I've included a lot there, but I would just say they're just a few areas that I've seen globally in terms of helping to modernize these areas. Yeah, back to you.
Okay, thanks, Alicia. I think noted your points. I think, yes, sure, Vaibhav, go ahead.
So, Amol, I wanted to add on top of what Alicia said, and two very, very specific examples that she gave. So one on the lending value chain perspective, one on the video or the KYC value chain perspective. I wanted to add a point over there, Amol. We all know that the regulator relaxed the guidelines on the KYC by introducing video KYC.
Yes.
And I just wanted to cite that example to show you guys, explain to everyone how complex it becomes for a bank to modernize the value chain when a new regulation comes in. So when video KYC regulation came in, at that point of time, banks went ahead, and we were also one of the first banks to incorporate video KYC, and then we made it live, and then we realized, and that broken journey was something that was not allowed. Okay, and most of the banks woke up to that realization and stopped video KYC. And then the entire end-to-end single journey was created, and when the single journey was created, at that time a new regulation came in where there was a discussion on premises setup for a video KYC as against the cloud. Okay, and then when there were clarifications sought on that, by that time few banks had already carried out that enhancement, and which also result in a lot of developments, a lot of months worth of work going in, and then it was coming. The clarification came in that okay, cloud setup is okay, but then it needs to be owned by the bank as against owned by the partner. Okay, so one simple value chain of an enhancement which is actually going to help the banks and the customer, which is the video KYC, but the backend effort that goes in, the time goes in is enormous. Again, coming to the second example where she was talking about the lending value chain. So there now what is happening is other than the traditional risk profiling, credit underwriting, so on, a lot of alternate data today is being used among by banks as well as by BFSI companies to actually come to a financial profiling of the user. And this alternate data can be as basic as having a mobile number or an email ID to as complex as whether this entity or this person has been making repayments in a certain time-based manner or not. But there is a lot of new innovations happening wherein in terms of, and there are a lot of debates with respect to that because there is in some of the cases there is privacy invasion as well. But there are technology enhancements to the extent that your SMS messages and notifications are automatically read, and that data is also considered as alternate data. Of course, the user gives the consent and so on and so forth. And there is so many enhancement in the digital lending space that has happened in the country today, Amol. Of course, that is a topic for a different webinar altogether.
Yes.
But yes, I just wanted to add these 2 points on to what Alicia said.
Okay, I think noted that point, and time is almost up. In fact, I'm getting reminders from my team. But still, before I wrap up, I will just spend 3 minutes with you, give you 1 minute to each one of you, and wrap up with last question. The question is going to be same for all of you. And I'll start with you, Amit. We have already seen different value chains in past, like lending, payment, KYC, and so many things. If we take a span of maybe next 2 to 3 years, what are the future value chains that you see in the BFSI sector?
Incidentally and interestingly, this question is now third time I'm trying to answer not in a different group altogether within the bank, and in a closed group of discussing it. How, and the question is not about next 2-3 years, it's about the next 10 years, if you look at it. So one thing you would see a sea chain wherein the Fintechs would be a very large, kind of a point of integration within the bank system. And I'm not saying startups. Startups would have a separate space altogether. But Fintechs are going to be a big reality. And the question is being said it from a different perspective, but what we are looking at, we are ready to work with all the stakeholders who want to make the country a better digital nation itself, and that's where we are ready to do. But at the same time, most of the people are still taking banking as a very, very easy kind of a thing. It's not true. Banking is a very, very complex thing. And if I would start talking about some of the use cases, people would be amazed how come a bank can do, that kind of a. And lending is a space for on a retail side. It looks easy for people, right? Getting a car loan, home loan, two-wheeler loan, personal loan. These are easy use cases. Come to the industrial lending, right? And the corporate lending, right?
Right.
And a different pool purchasing, right? You would understand, and maybe Vaibhav, etc., would understand what I'm trying to tell.
Yes.
But the use cases over there are not, as of now, touched upon. Okay. Everybody have tried doing the easy part of the equation, right? The tough questions are way ahead, right? So, and we are looking at to answer those tough questions, because it's like a question which has been often asked, whether Mumbai, these local trains are in profit or they are not in profit, because they are full of people, right?
Yes.
So the answer I won't give, but you try finding out whether they are in profit or whether they are not in profit, right? But if they are not in profit, then from where the money is coming, right? It's from a very different space altogether.
Right.
And and that's where the real business is. So I hope as we move forward, you would see a lot of changes happening into a BFSI industry, for sure.
Okay, sure, Amit. Elisha, your views?
Oh, look, the art of the possible, like the banking industry is so interesting. I'm lucky enough to spend, some of my career in this space. And I just say that some of the financial instruments and products, the financial products themselves are changing. We're seeing crypto asset backed, we're seeing green bonds. We're seeing, whilst they've been around for even a couple of years, we're seeing new modeling techniques. Banks are looking at things that they never used to look at before. Sustainability would be one of them as well, how various countries are looking to transition. We're seeing a lot of movement. So it's a bright future. It's also a challenging future. But people who, keep up with these trends and keep on top of them, can innovate, but also keep it simple and true to their value proposition, will win at the end of the day. So they were just a couple of things we're seeing. We're only going to see more advancements with the use of machine learning, obviously to, prevent issues from happening. So I see it as grow the bank, protect the bank, and really shift the bank into new areas that maybe customers aren't being able to be financed in rural areas or what have you. So we're seeing an underdeveloped market. Being able to finance those populations and groups will be really important as well. So yeah, it's a bright future ahead. Lots happening. I would end with that.
Great, Elisha. And the last words from Vaibhav, your views.
Amol, banking is all about trust. Okay, if you have a satisfied customer, then you are an efficient bank. And the customer, if he trusts you, then he's going to bank with you. So it is important for the banks to know what your customer needs. And that is why banks have to shed their old skin and they have to become agile as fintechs. Banks have to innovate, create new products. Banks have to create use case driven products. Some of the value chains that I see addressing directly your question: consumer ecosystems, merchant ecosystems, supplier ecosystems, supply chain ecosystems, corporate ecosystems. And that is what Amit was trying to say, that if you go to the corporate lending ecosystem, it's a Pandora's box on its own. Some other ecosystems are smart city ecosystems, government ecosystems, subsidy payments, and so on. So, sky is the limit because banking is there to stay. Banking is the backbone of finance and economy, and banks will have to evolve. Banks will have to continuously automate and modernize their value chain.
Right. Noted, Vaibhav, Amit, and Elisha, your points, I think, really valid points and very meaningful conversation. I must say, good learnings for me, my readers and viewers as well. So thank you, Amit, Elisha, and Vaibhav for taking part into this conversation and sharing remarkable perspective. Thank you so much.
Thank you.
Thank you.
Thank you, Vaibhav. Nice to meet you.